Okay, good afternoon, ladies and gentlemen. Welcome back to the 24th of February weekly market review. As usual, I have Gerald with me today. How are you, Gerald?
Good, good. Hi everybody. I think we have got some exciting developments in the Singapore market after the MAS announced a set of measures to revitalize the Singapore equities market last Friday. So we'll be sharing more about some of these measures together with other updates on the global markets.
Yes, indeed. A lot of things happen in the market. On the US side, we have quite a bit of data coming in on the US side. So there were a bit of concerns because the US consumer sentiment dropped, and then consumers are worried about inflation getting higher ahead, caused by Donald Trump tariffs, and also existing home sales also fell. So market actually pulled back. The US market actually pulled back quite a bit on Friday, but I will touch on that later on to see whether that's an opportunity. And I think today we have a lot to cover. We have Seatrium results, we have UOB results, we have the MAS announcement of the 5 billion program. So I will leave it to Gerald to go through these details, so I will not hold back out the time. So Gerald, over to you.
Thank you. Okay, before we start, the usual disclaimers that today's sharing is for information purposes only and should not be taken to be financial advice. Okay, we have an upcoming Ask SIAS on 12th of March. So if you'd like to participate, you can scan to register, and registration will close on 11th of March. Okay, if you find the weekly market review helpful, do leave us a review on Google. And if you'd like to join SIAS as a member to be able to access various online resources as well as investor education programs, you can scan this QR code or go to sias.org.sg/membership. Okay, so we saw divergent performance amongst the global markets last week. Like Sunny mentioned, the S&P 500 pulled back, particularly towards the later part of the week. And for the week, we saw the S&P 500 down by 1.7%. Okay, Nasdaq was down by 2.5%. So fairly broad-based losses in the US market. Closer to home, the STI was up by 1.3% to reach a new all-time closing high. And then at the same time, we saw the Chinese markets doing very well at the back of Alibaba's very strong earnings as well. Okay, so very divergent performance amongst the global markets, and I'll share what are some of the reasons behind it. Okay, we start with the US data. The key data point that came out was the University of Michigan Consumer Sentiment Survey. And what we see here is that the January data effectively saw close to a 10% month-on-month decline compared to December. So if I were to look at the sentiment, it is the weakest level in close to a year. And that really represents the concerns amongst the consumers around how Trump's tariffs would lead to inflation and how that is driving weakening consumer sentiment. Okay, so this follows what we saw earlier in the retail sales data. If you recall, for the month of January, we saw a very sharp decline in retail sales, and that is once again driven by these concerns around the impact of inflation. Okay, so those are some of the key economic data points that came out in the US, which led to concerns around health of the US economy and hence the pullback in US stocks. In Singapore, the big news was really these measures to boost Singapore's equity market that came out late on Friday night. So some of these measures include a new 5 billion equity market development program. This is meant to channel funds to asset managers with a focus on Singapore-listed equities and meant to drive more liquidity towards the Singapore market. Okay, so another potential pool of liquidity can also come from the family offices. So another measure would be that the Global Investor Program, which is a program that is meant to attract family offices into Singapore, they will now require family offices to at least allocate 50 million of their assets under management to equities listed on Singapore-approved exchanges. Okay, so all of this are some of the demand-side measures meant to boost the liquidity of the market there are various measures to boost the supply side as well, to have more listings in the Singapore market, some regulatory changes. So all of this are meant to be able to drive investor confidence towards the Singapore equity market. So these are the first set of measures, and then we have got a potentially second set of measures to be announced by the end of the year. Okay, so if I were to look at the performance of the Singapore market, last week we saw that the market continued to reach record highs. And if I were to look at the strong performance in the STI last week, we have got Semcom Industries up by 6.3%. Some of the China-related names like Jardine Matheson, Hong Kong Land, up by 5.8% and 3.9% respectively. And DBS up by 4% as the banks continue to report strong earnings. Okay, in terms of top losers, we have got Seatrium that reported disappointing earnings and some profit taking that we saw there. And likewise, Wilmar also down by 6% after they reported weakness in the earnings. Okay, so I'll talk about two of the names that reported earnings last week. The first is UOB, one of the names that has reached a very high price over the last 1 year, but then seeing some slight pullback after the announcement of the results. Okay, so overall, what we saw for UOB's fourth quarter earnings, if I compare that to the fourth quarter of 2023, fairly stable net interest income as well as total income. And then that led to an increase in the net profit of about 3% in the fourth quarter of 2024. Okay, I'll break down what is driving some of these changes in the net interest income as well as net profit. But overall, for the full year, we saw that the reported net profit for UOB was up by 6% to above 6 billion Singapore dollars. Okay, so we start by looking at the net interest margin of UOB. This is where we saw some slight decline in the net interest margin to 2% from 2.05% in the third quarter. Okay, so fairly stable, but I think the slight decline compared to the third quarter might be one area that investors would want to pay a close lookout for, especially if interest rates were to decline further, that can potentially further impact the net interest margin of UOB. Okay, next we have got the fee income. What we see here is that the fourth quarter fee income was at 784 million. What was doing well in the fourth quarter is that the wealth fee income, 178 million, continued to be higher than what we saw compared to the fourth quarter of 2023. Okay, and then if I were to look at the credit card, that also was higher compared to the previous year. So overall, we saw a growth in the fee income of UOB in the fourth quarter of this year compared to the fourth quarter of last year. Okay, so that has helped to offset some of the weakness in the net interest margin, which is why UOB has still been able to report fairly stable earnings for the fourth quarter of this year. Okay, the other good news for investors is that UOB raised the dividend payout. Second half dividend of 92 cents per share, which will bring the total dividend to $1.80 for 2024. So with the higher profit that we saw for the full year, we have seen UOB actually increasing its dividend payout to be rewarding shareholders. And what we see here is that apart from this increase in the ordinary dividend, UOB has also announced further capital management initiatives. Okay, so what they announced would be a package to return surplus capital through various capital options amounting to 3 billion over 3 years. So what would this include? Includes a 50-cent special dividend to be paid out in 2 tranches in 2025. So each representing 25 cents. And then at the same time, we have got a 2 billion share buyback program to be completed over the next 3 years. Okay, so all of this is meant to be able to drive more efficient capital allocation. And with that, we are looking at a fairly decent dividend yield for UOB. Okay. If I were to look at the outlook for 2025, no change in their guidance for the total income in 2025. They expect the total income this year to be higher than in 2024. This is driven by a high single-digit loan growth as well as double-digit fee income growth. Okay, so I think with the confidence towards the 2025 profit, that is why they are comfortable in terms of distributing more dividends to shareholders. Okay, if I were to look at the valuation of UOB now, PE of about 9.45 times, that is in line with the historical average, because even though the share price has gone higher, because we have seen this earnings growth for UOB as well, so that has helped to bring down the PE ratio to be in line with the historical average. If you to look at it from a price to book earnings, then 1.4 times price to book, above the historical average price to book ratio of 1 times. And that is also driven by investor expectations that the high return on equity that it is making now can be sustained. Okay, if we're to look at the dividend yield of UOB, on a reported level at about 4.8% dividend yield, but then if you to include the scope for the dividend that they have announced for 2025, the 50 cents special dividend, then overall we might be looking at the dividend yield for UOB that is close to 6%. Okay, so some investors actually ask, why did UOB pull back after the earnings? Why, despite the announcement of the share buyback as well as the special dividend, we did not see a very significant positive reaction to UOB share price? I think part of the reason is because some of the investors might have switched to DBS, which is one of the top gainers for the STI last week. That is because including some of the initiatives announced by DBS, we are looking at a dividend yield of about 6.5%, which is still higher than what we see for the dividend yield of UOB. Okay, so that is a summary of the two banks' earnings. We have OCBC reporting the results this week, so there's another key earnings to be looking out for. Okay, next we have got Seatrium earnings. We saw the share price hitting a high of close to 260 earlier in the previous week, before correcting after the announcement of the results. Okay, so at the headline level, the earnings were good. We saw improvement in the revenue as well as the profit of Seatrium. So it is back to profitability after several years of losses. And that is really because it's been able to improve on its revenue with the stronger order book that it has. Okay, so we see this growth in the revenue in the second half of the year, that grew by 18% to 5.2 billion. And then at the EBITDA, it was 316 million in the second half, which is up 57% compared to the second half of 2023. Okay, if I were to look at the underlying EBITDA, then excluding some of the one-off items, it was just up 3% compared to the previous year. Okay, so some investors ask, why did the share price not react positively to the earnings? I think that is because the reported profit was impacted by quite a number of one-off items, and investors might be concerned that the underlying profit might not be as strong as what the headline number might suggest. Okay, so what are some of these one-off items? As an analyst, I'll go and dig deeper into what is driving the profit. And we see here quite a number of one-off items in 2024. For the second half of the year, we see things like write-back of corporate claims, write-back of restoration costs, reversal of some of the liabilities for a joint venture. So I think because of some of these one-off write-backs, investors are concerned that the underlying profit may not be as strong as what the headline number might actually suggest. And that's the reason that we see for the pullback in Seatrium share price. Okay, on a more positive note, we have seen Seatrium's order book going to the highest level in more than a decade. So this is because of the 15.2 billion of new orders that is secured in 2024 and year to date 2025. Okay, so at this point in time, the net order book is at 23.2 billion, which is higher than what it was at the end of 2023, which was 16.2 billion. At the same time, the company also shared some updates on their strategic initiatives. Overall, we see that they are on track to be able to hit their cost savings run rate by the end of 2025. That is driven by some of the measures that are meant to bring down the overheads as well as procurement cost. Okay, so that would be the update for the market in the past week. For this week, we continue with the earnings season in Singapore, and I mentioned earlier that we'll continue to keep a lookout for OCBC's earnings. Okay, many investors will also be interested in looking at NVIDIA's earnings that's coming out on Wednesday, 26th of Feb. And then on top of that, we have got the Singapore T-bill auction this Thursday, as well as the closing for the Singapore Savings Bond. Okay, so with that, I'll hand over to Sunny, who will share with us the technical analysis.
Okay, thanks, Gerald, for going through the details of some of the key earnings that we saw in the Singapore market last week. So, like Gerald touched on earlier, we suffered some kind of a big pullback on the US market. And to go through those data that Gerald went through just now, so these are some of the data that we are looking at. We are looking at the retail sales number coming down. We are looking at the housing data coming down, and of course, the consumer sentiments also came down quite a bit. So the market now is worried about inflation and the US economy going forward. But market is now I have pulled back to a significant support level, which I will go through shortly. And the next big data, of course, this week we have the NVIDIA earnings, which will move the market. And then we also have the PCE data, which is the Fed preferred gauge for inflation reading. And this would be a key confirmation to say whether inflation could have a runaway impact on the US market or the interest rate decision. Okay, so I think market may have may have overreacted a little bit. So I'll go through the US indices first for this week technical analysis. So you can see that the Dow Jones index actually fell 2.5% for the whole week of the last trading week. And on Friday itself, it dropped about 1.7% or 750 points. And if you couple it with the Thursday drop as well, in total, Dow Jones for the 2-day period dropped over 1,000 points, closer to 1,200 points. Okay, so this drop has already put the Dow Jones index towards the amber line, which is the 100 days exponential moving average. So this is a key support level. As you can see previously, whenever it starts to challenge this amber line, which is the 100 days exponential moving average, usually there could be a rebound happening. And I believe this time round, we could also see a rebound happening soon, because the trend usually tends to repeat itself. Okay. On the indicators wise, you can see that MACD has gone into a very negative reading. Okay, the MAC line is diverging away downwards away from the signal line. So that means that there's a lot of a downwards negative momentum now in the price movement. And the RSI has also went to the low of 39 points last Friday. Okay, so if this is a support level, then we would want a confirmation to see whether this support level is likely to hold the 100 days exponential moving average at 43,261 points. So we will need either of the indicators to give us some early signs of a rebound, and that could probably come in the RSI when it touched the 30-point mark, which is the oversold level, and that means that the rebound could be happening when the RSI hit the 30-point level, which is also the scenario where you saw in December. Once the RSI hit the 30-point level, oversold level, there is usually some kind of rebound coming in. Okay, at least a mean reversion, a technical bounce back to the 20 days moving average, which is at the 44,500 points level right now. Okay, so this could be a buying opportunity if you are looking at getting back into the US indices, which has been touching a all-time high, especially on the S&P 500, where we had a all-time close earlier last week. Okay, so the S&P 500 also pulled back 1.7% last Friday, and it actually technically wiped out all the gains that we saw during that week. Okay, so the S&P 500 have pulled back to the level of the blue line, which is the 50 days exponential moving average, now at the 6,013 points level. Okay, so this is a crucial level also to look for on the S&P 500. Although the S&P 500 do touch the 100 days moving average quite a few times in the December-January period, as well as the August period. As you can see, most of the time, especially in September, October, and November, usually when it retraces back to the blue color support level, the 50 days moving average, there could also be some rebound. Okay, so to sort of gauge whether this rebound will hold on the S&P 500, of course, we will need the indicators to help us to give us some confirmation. So we have got the first negative reading on the S&P 500 last Friday. So that means that market may have a change in direction right now. From the uptrend, it may go into a technical pullback. So not as quick not as quick a rebound soon for the S&P 500, because the RSI at the 46-point reading has just crossed below the 50-point neutral mark. So that means that the momentum is very weak now on the S&P 500, and we still have some way to go before we touch the 30-point oversold level on the RSI, which was the one that we last saw in the August period last year. Okay, so for the S&P 500, the rebound may not come in so soon because indicators wise don't have not really shown that we are going into a oversold level yet. So that means that probably investors could look at the S&P 500 below the 50 days moving average, which is 6,013. And of course, the next support level will come in at the 100 days moving average at about 5,915 points. So 16,000 handle will be the one to watch. 5,900 will be the level to accumulate further. Okay, lastly, let me move to the NASDAQ Composite Index, which was the the worst performer last Friday. Okay, so this tech-heavy index, as you can see, also similar to the S&P 500 performance, has retraced back to the blue line, which is the 50 days exponential moving average EMA, now at 19,577 points. Friday closing was just slightly lower at 19,524 points. Okay, so we still have a positive reading on the NASDAQ MACD indicator, now reading at 0.82, a slight positive reading. But if let's say market were to go further, that would have gone into a negative reading, and that could signal a change in direction on the NASDAQ Composite Index. The RSI is also getting weaker. It crossed the 50-point neutral mark last Friday. The latest reading was at 45 as for market close, and we are still somewhere to where before we touch the oversold level of 30, which was also last observed during the August period of last year. So I think for now, Dow Jones Index would likely be the index that would see some kind of rebound first before the S&P 500 and the NASDAQ Composite Index follows. Okay, so key levels to watch for the NASDAQ Composite Index are 15,500. That will be the next support that we're looking at, with the 100 days exponential moving average, the amber line, now at the 15,157 points level. So the 19,000 handle could be a very key support that the NASDAQ Composite Index may be eyeing if a pullback were to worsen in this week period. Okay, so next, let's move to the Asian side. Let's start with the STI, which is a very contrasting set of scenarios from the US. We have seen that the STI touched a all-time high of 3,949 points last Tuesday, okay, and Wednesday. So you can see that STI is in a very good shape right now, of course, led by the the earnings in the three local banks, which OCBC will be announcing this week on 26th of February. Okay, so on the SCI, we are very toppish right now. You can see that the MACD indicator is showing some the trajectory is upwards. There's still a gap between the MACD line and the signal line, meaning that there is a positive reading and that uptrend momentum is likely going to continue further with the RSI at the 70-point mark, which is the overbought level already. So with with that kind of conflicting kind of a reading on the indicators, so the upside could be very limited, and hence the upper bound of the Bollinger Band now at the 3,961 points level, or even the 4,000 handle, okay, would likely be we will likely see some kind of a selling coming in once we touch the 4,000 handle, and that could bring us back to the level of the 20 days moving average, which has been a very strong support level for the STI this year, now at the 3,867 points level. Okay, so that is the support level that we are looking at. STI is having a good run. On top of that, the 5 billion sort of a equity plan that MAS announced for the Singapore equity markets is likely going to benefit our markets further. Okay, so these are the updates that I have this week. Anything else to add, Gerald?
I think we'll be looking out very closely for some of the remaining earnings, particularly OCBC's earnings. At the same time, for the US market, we have got the NVIDIA earnings that will be closely watched. So quite a number of key developments that we have. Do continue to keep a lookout as we go into the last week of the earnings season, together with some of the major economic releases.
Yes, and we look forward to update you with this development, the NVIDIA results, as course, the PCE index data that will be coming in end of this week that will really move the market, and then we will have a stress perspective in the next weekly market review, which will happen next month in March. So these are the things that we want to cover today, and we'd like to thank you for tuning in. So we from us to you, have a good trading week ahead, and we will see you in the next market review. Bye bye.
See you.